Hello and welcome to Car Dealer Live. My name is James Batchelor, and joining me today to take a look at what's going on in the new and used car markets is Auto Trader's Ian Plummer. Hello, Ian.
Hi there, James. Nice to see you.
Always good to have you on, Ian. Thank you so much for taking some time out today to chat to
Sure.
us. We're at the beginning of April, and of course, right at the beginning of the month, as we all know, the new car registration figures come out. It does seem to be pretty positive, if you believe what the SMT say. I mean, what in from Auto Trader's perspective? I mean, what do you think the current health of the new car market is?
Well, I think it's a nuanced picture, to be honest with you. I think there's definitely some positivity. The market is up, yes, another 10% year-on-year growth number. That's a strong march, strongest since we've seen since 2019. It's the 20th consecutive month of growth, so we've definitely still got a claim to sort of the continuation of recovery from the pandemic affected, supply chain affected years that we knew from 2020, 21, 22, and so on. But there are some worrying signs within all of that. So first, I think I'd highlight the fact that it is fleet that's driving growth. For many months of those 20 where we had the return to positivity in new car sales numbers, it was retail that was being prioritized by manufacturers. Now fleet is finally getting their chance. We'll probably run out of that sort of a pent-up fleet demand that we can keep on filling in the future months. We need to be careful about that, because what is worrying is that that's masking the fact that private sales were actually down 9% on last year, and they're still 37% back on where they were in 2019. So we do need to stimulate more private retail demand. We're seeing quite positive levels of intent on Auto Trader. We've seen growth of people looking, numbers of people looking at new cars on our site. We saw more than 2 million uniques looking at new cars on Auto Trader last month, and that's up around 15% on prior year. So there's definitely some elements of positivity. Some of those people might be going down salary sacrifice channels that are actually called fleet. So maybe I'm over egging it a little bit, but the private retail negativity is definitely something we should be concerned about and have a watch out for in the months ahead.
Yeah. I mean, with this sort of soft retail demand, I suppose you could put it. Do you think car manufacturers are doing enough to drive this consumer demand?
Well, I think it's definitely happening, and it's growing, that trend you're talking about in terms of stimulating consumer demand. That's a simple necessity on the basis of the fact that we're now in a market, probably ever since summer of last year, where demand is probably below the level of available supply. So when that happens, you need to stimulate demand. What we're seeing is manufacturers spending a bit more money on media to awaken people's interest in their particular model and so on, and needing to spend a bit more money on the price message to, again, stimulate interest in their vehicles and help to make those vehicles stand out, to drag people out of sometimes used cars into new. So there is definitely an increase in the level of discounting we're seeing. We're seeing probably 3 and 4 cars now, a bit more than that, of those that are advertised on Auto Trader, new cars, I mean, which have a discount on them. That's grown quite a lot, around 15% up on prior year. The actual amount that's discounted has grown from around 6%, 6% this time last year, to nearly 9% across all fuel types now. That level of push is even greater in electric, which are now getting about 11% discount from being below the other fuel types. They're now well ahead of the other fuel types. So electric is the point in the market where the pressure is being felt most keenly. And all of that activity is likely to need to continue to grow as that private sort of retail demand I mentioned is looking quite sluggish. It's going to need a bit more stimulus. And all of that does fundamentally mean that ever since that point I mentioned last summer, when it felt like the balance of supply and demand tipped from being supply constrained to probably demand stimulus, we are now in what we would call a push market. We're not in an overheated market where we did 2.5 million new cars, for example, in the years pre-pandemic. We'll probably still do 2 million this year, but it is a push market where we're needing to generate interest rather than sort of put the car on the shelf, in inverted commas, and wait for the consumer to come to us. I'm not saying it was ever that easy, but it was easier when supply was constrained and demand was high. We're no longer in that context.
Hmm. Let's just stick with electric cars, if we may. Now, at Car Dealer Live, our big event last month, your colleague Catherine talked about the big growth in demand for used electric vehicles. But what about new electric vehicles? I mean, are manufacturers are they fighting a losing battle here, or what do they need to do to get customers really fired up about electric cars?
Well, I certainly don't think it's a losing battle because I think the consumer is showing great interest in electric cars. If you look at the channels that are working in electric, there are two particularly that stand out. Some of those sub channels within fleet. So I mentioned salary sacrifice a minute ago, where people are able to get a fiscal benefit that equalizes some of the cost challenges of electrics. They are more expensive. That is the fundamental problem I'll come back to at the moment in a moment. They work well in salary sacrifice. The same applies in some of the leasing channels, sorry, where benefit in kind advantages help again equalize the cost factor for individuals. Those are fleet channels, like I said, but not really fleet channels. Those are individuals benefiting from fleet terms within the ways that they can access cars. So that's great. Equally, the second is on used EVs, where, as Catherine said, speed of turn of electric is even quicker than the very fast speed of turn we're seeing on all used cars right now. 25 days to turn used cars the last month, quickest ever number we've seen. So where electric cars are priced or affordably, as they have been after they've been realigned in the used car market, or have those fiscal benefits in the new car market, consumers buy them very readily. The challenge, as you rightly point out, is that they are still too expensive for the majority of people. With a 30+% gap from ICE to EV equivalents, for the mass majority of people who now need to get into EVs, we're hit the challenging ZEV targets that are out there. We're well beyond the early adopters who maybe could afford to pay the green premium of doing the right thing, as it's called. People can't make that call, that 30% sort of increased price, because they'd like to do it. I'm sure they would. It needs to be a rational decision. But fundamentally, we are going to need to see the price equation squared by manufacturers if they're to achieve the regulatory challenge that they've been given. The government doesn't look like it's going to come to their aid. So the only way to get there, quite frankly, is going to be changing the price dynamic, like I mentioned, in new cars generally. We've seen already in just recent weeks a couple of very strong offers that have done just that. So one very strong offer we saw in particular was the Honda EN-Y1. Another one of the catchily named electric vehicles out there in the market these days. I'm sure we'll get used to them, but they don't trip off the tongue as easily as Golf and Fiesta and so on, do they? But the EN-Y1 was being sold at a monthly payment of north of £400 up until very strong manufacturer and then retailer support got it to a sub £200 monthly payment with a nil deposit. So a hugely attractive offer that led to what, quite simply, strong elasticity of demand. You put an incentive out there, you want it to have a reaction. That's the elasticity. It did. It surged from nowhere, to be honest, on our site to being the #1 EV lead generator in new cars, and overtaking the ever successful MG4. It surged, had a lot of interest, could generate a lot of leads, and by all accounts, when you can see the Honda market share growth last month and last quarter, probably a good part of the explanation to their success. So unfortunately, they pulled that off the back again now. So the vehicle has fallen off just more recently in terms of its impact for consumers. But all of that to say that fundamentally, we are going to need to see manufacturers square the affordability question. Thankfully, there are lots of new electric vehicles coming out in the months to come, which also add to the gaps we see in more affordable segments. So the Renault 5 is one that's very much expected and anticipated by consumers. It looks like an amazing car. I saw it in Geneva recently. You need affordable vehicles like that, or the Dacia Spring, even more affordable in the 20,000, even £15,000 categories and so on. That will hopefully awaken the clear interest that is out there, as I said at the beginning, from EV interested buyers to actually translate that interest into a purchase.
But these big price cuts, which manufacturers have to do to try and have a hope of meeting the quota, the mandate quota.
Yep.
It's a short-term gain, though, isn't it? Because there must be a knock-on effect for used values.
There's definitely a challenge there in terms of the used car market, but right now I think we're a long way from that. What the new retail EV context looks like for a manufacturer is actually much more challenging, because those new EVs are being compared actually rather unfavorably by consumers, where they do a search for their next new car, and new for them is not necessarily brand new. New for them means could be used, could be new. They compare that new, let's say, volume EV at 25, 30,000 pounds, maybe more, to a realigned 2-year-old premium EV. Remember, those cars have had that 20 or so percent price cut that happened through last winter and so on, and they've now stabilized, thankfully, those prices. But those vehicles are looking extremely attractive. And so many consumers are saying, why would I buy the brand new volume player? I could really get a great premium product that's got more on it. That premium brand I'd always love to get. I'll get this one. So I think at the moment, the new car market in EVs isn't seeing, systematically at least, apart from the odd example that I just mentioned, the kind of price push which is fundamentally affecting the used car market. That will happen if brands, as you say, James, do push increasingly to get these ZEV targets done.
Yeah. I have to talk to you about the Chinese brands. I mean, recently I was with Omoda and JQ, who are launching imminently in the UK, and we hear of countless others who are eyeing up the UK car market. Um, what's your gut feeling about all of these new brands? I mean, do you really think they're going to have a big impact on the market?
Short answer is yes. The slightly longer one, I'll try and keep it a little bit short, is that I think the whole landscape of the OEM brands in the UK is very different today than it was what it was just recently. If you look back just to the pre-pandemic times, there are around 47 brands in the UK. Today, there are around 58. There are more coming, as you mentioned. There are lots of interesting Chinese in particular, but not only Vietnamese, American brands coming over. I'm heading to the Beijing Motor Show in a couple of weeks' time, looking forward to seeing all the many brands that are yet to come. So there's more on the way. But if you just look at the existing landscape we've got in the UK, again, looking back to 2019, you would have seen Ford and Vauxhall lead the market in those days. Volkswagen coming through already at that point to sort of maybe shake that up a little bit already. And now they lead, Volkswagen. Ford and Vauxhall have historically always been in the sort of double digits. They're now around the mid-single digits, both of them. And they're surpassed not just by Volkswagen, but this last quarter by Nissan, by BMW. Just behind them, you've got the two Koreans, Hyundai, sorry, and Kia, who are surging forwards in terms of share. Toyota are also doing well. So the whole landscape has changed quite a lot from being led by a couple to being very broadly spread by many brands who've got 4, 5, 6, 7, 8% market share. So it's a very different world we're in. On top of that, you look at the Chinese brands, they account for just about 10% of all the cars sold in the UK now. If you add up Chinese owned, that includes MG, Volvo, Polestar, or so on, but also Chinese built, Tesla, they're built in Shanghai, the vehicles we sell over here. 10% of all cars and around a third of electric cars sold in the UK are coming from either Chinese owned or Chinese built factories. So they already massively influence our market. And just like Kia and Hyundai grew massively with the catalyst of the scrappage program that's put in place after the great financial crisis, and they leapt from single, it was like 0 point something or 1% market share for both of them to 4 or so market share, and they've carried on since. Just like them, MG, for example, have already done that. We've already hardly seen it happen, but they've already, not just on EVs, but predominantly on EVs, already got to 4.5 or so, 5%, I bet very soon, market share. And that is likely, I think, to continue as time moves on. They've got clearly awareness challenges, some of these brands. We don't know Omoda and JQ, you just mentioned. We don't know Great Wall Motors, the Aura or the BYD brands. But with the likes of BYD getting a lot of media attention, that saw them surge in interest on our site when they were talked about in the beginning of the year as having overtaken Tesla, now sponsoring the Euros, which we're hopefully going to look forward to seeing our own teams doing well in a few weeks' time. That's going to build their awareness. Those two brands already account for 0.5% market share in the UK, and that's only half. But it's half from nothing, and it's only set to grow. So our expectation has long been that there will be about 20% of the UK market taken up by those Chinese brands in the years to come, probably by the beginning of the next decade at the latest. That means that either the market's going to have to grow for the others to keep their volumes as they are, or some will see their own share nibbled away in the same way I described. We've already seen that happen over the last few years with other brands sort of rising and some of those volume stalwarts of the past maybe fading a little bit in terms of their share. So a
Yeah.
lot of change.
Yeah, I know, I agree, and also I think it's entirely plausible that there will be some Chinese brands who arrive and they also disappear. They're here for a short period of time and they can't quite get the traction needed in the UK market. So I think there's going to be a lot. There's going to be a lot going on, isn't there? Really, but
Absolutely.
lastly, Ian, I mean, what's your outlook for the next few months? I mean, you always strike me as a bit of an optimistic chap, so I would imagine you really are optimistic.
Well, I think I'm cautiously optimistic right now, James. I think we haven't seen any negativity in the core data over the last few months, and we don't see any occurring in the next few either. All the macro sort of consumer confidence indicators we look at show that there's probably an improving degree of confidence in the market. At a wider economic level, I think everybody would agree that we're expecting inflation to continue its downward trend, interest rates to start a downward trend. That should hopefully improve people's purchasing power and make monthly payment sort of more affordable to people. We're seeing our new car audience growing, as I've touched on, and more interest in vehicles. Affordability and availability, they've been lacking in the last few years. They're growing again right now. That will stimulate interest. So with supply being reasonably good as well, and hopefully no more shocks on the horizon, that augurs quite well, I think, for the outlook just now. And more broadly, in terms of used cars, I touched briefly on the fact that speed of turn is very good, 25 days in March, fastest ever recorded. We're seeing demand in all our sort of broad indicators up around 6%, supply still just up 1%, and it won't grow. So remembering those slightly weird and we think slightly wrong months of correction and pricing at the back end of last year, led by trade indicators, we don't see any reason to believe that values or sales should decline in used cars either. They're up a couple of percent according to our data over the first quarter, which is good to see. We'd expect that to continue. So we're probably still looking at a positive outlook of a 2 million or so market for the year ahead in new cars, and probably north of 7 million in used cars, and good growth on last year again. And just to finish, if Auto Trader is one thing, it's a good bellwether for demand. We had just under 90 million visits to our platform last month, which is a record. So growing on last record, which is just January, also just last quarter. So all of those are great signs that consumer confidence is pretty robust. Things aren't perfect, but I am definitely still in that optimistic camp, cautiously optimistic, James.
Cautiously optimistic. I like it. Some fantastic stuff there, Ian. Thank you so much for joining us today.
Thank you.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye bye.